Hey guys, so today we finally got our expansion to the downside and I will make a quick trade breakdown. So as always, we start with the daily chart. So as you can see right here, I'm recording this late, but yeah, still have to do it. Really important day. So basically what is important on a daily chart, right here we still have like the wick to the to the upside, one wick to the downside, which are basically our important levels on the daily chart, because we are trading basically within this price range, and we scrapped the daily buy side liquidity yesterday, so we could not close above it. We did not we did not break out of this range, but only like swept the liquidity, and we still have like the big higher time frame gap down here and daily liquidity as well. So now drop to a 50-minute chart. It looks messy, but it's actually not. So let's look at like this. So what is important? We have midnight opening price right here. We have London highs. We have obviously London lows, which got already scrapped. We have New York open kill zone sell side liquidity, New York open kill zone buy side liquidity, and equal highs right here. Midnight opening price, as already mentioned, 9:30 right here. So maybe let's extend it a bit to the right. 8:30 right here. And we also do have a new higher time frame gap from today, so that's also important. As you can see right here, the bodies are respecting the higher time frame gap relatively perfect. So the bodies are staying right at consequent encroachment, and we also have like the daily sell side liquidity down here, and also consequent encroachment of the daily wick. And what is really important is Monday's regular trading hours new opening range high. So of the gap, it's the high, and that's what I want to show you now. So basically, if you saw my yesterday's trade recap, I was already looking for price to trade back to this gap already the last basically 2 days. So that's the gap from Monday, as you can see, and there we only traded higher. I wanted to see lower prices to the consequent encroachment, but we basically traded only higher, so that was a really bullish day. And then on Tuesday, we could not really basically trade out of this range right here. So we definitely had seek and destroy, and we're basically stuck within the daily wicks I showed you before. And then with today's AM session, we were able to really expand to the downside, as you can see right here, trading to consequent encroachment, reacting off it, breaking even lower, closing the gap, once again reacting off it, trading all the way down, sweeping also like regular trading hours, sell side liquidity, and now we are trading back to consequent encroachment. So yeah, really nice. As you can see right here, the bodies are respecting the levels. So here as well, the upper, so basically the high of the new opening range gap, and right here it's the low, and also like consequent encroachment. So yeah, that's what basically was my approach, or what my bias was. So I wanted to see lower prices, not only yesterday, but today as well. So right here we have NQ, but now I want to show you ES because it's a bit different. So what is important right here is the fact that we have basically, so we also like have London highs right here. We also swept the sell side liquidity right here, swept London lows, but what is different right here is that we swept New York open kill zone sell side liquidity, which is right here already. So basically right here we have S&T. So let's look at basically look to it on a 1 minute chart. It's not clean, but I will show you on NQ as well. So basically ES traded higher, swept the New York open kill zone sell side buy side liquidity. We could not trade to the equal highs right here, and then with the opening we just traded aggressively lower, because with sweeping session liquidity, with sweeping the New York Open kill zone buy side liquidity, a market maker sell model is in play, and then we could aggressively trade lower. So what was that on NQ? So on NQ it looks basically similar with the opening. So right here you can see we have our New York Open kill zone buy side liquidity right up here, and basically formed a huge SMT, and therefore we got a aggressive sell-off within the opening as well, and we scrapped New York Open kill zone sell side liquidity and also daily sell side liquidity. We did not respect actually the consequent encroachment right here, but it followed a really aggressive reversal. So because we scrapped external liquidity, that's a market maker buy model. So right here we have basically a market maker sell model, but only with a bearish SMT, but then it followed a market maker buy model to the upside. And basically I was trying to get into this trade, but as you can see right here, it was really aggressive. We did not had any chance to basically enter in here, so I was a bit too I don't know, too caught up with the aggressive moves, because I really liked it after the liquidity sweep, especially because yesterday we had seek and destroy, and there you only want basically to trade back to the opening prices, what we got right here. So I entered actually my first trade long in here. So I will show you. It looks a bit messy, but basically I only had like 2 buys which would play out, and one of them is wrong, and the other one actually played out. So it looks like, as obviously a revenge trade, or not revenge trade, but over traded within the setup, but I will get to it in a second. So what I was thinking, I wanted to see higher prices. I wanted to see basically trade to the equal highs we had on the 5-minute chart. So basically right here, that looked to me really like clean liquidity, also like with the consequent encroachment, and eventually like basically try to London highs and break out of the range. But I was not thinking of regular trading hours, so basically I forgot about the fact that I wanted to see basically NQ trade back to Monday's regular trading hours in the first place. So I kind of got like caught up with this aggressive move to the upside, which I wanted to be like a part of. So was a bit emotional, I know, was not the right approach. So I got stopped right here and basically realized that, so I went short right here, and then because I had basically wrong stop loss placement, I got stopped right here. So especially because we are right here in high resistance, we are trading near higher time frame gaps, near opening prices, we can expect that we are really in high resistance, but we definitely should have like basically looked for shorts, because with the sweep of the buy side liquidity right here, we swept external liquidity, because that's the market maker sell model, and with sweeping the buy side liquidity up here, we now have a market maker sell model in play, because the market maker buy model gets completed with sweeping the external buy side liquidity. And as you can see right here, we also got a bullish SMT, because ES already swept New York Open kill zone buy side liquidity, and therefore we don't have to trade higher on ES, and we just ranged. So I will show you right here. 1 second. So as you can see right here, that's the bearish SMT, because on ES we already had a market maker sell model. We already swept the New York Open kill zone sell side liquidity, so therefore that's our market maker sell model. Then we basically had time distortion in here, and then we could sell off. But that was not the case on NQ. On NQ we did not sweep any external liquidity, so therefore there is no real market maker sell model, and we are not ready to basically expand to the upside, to the downside, sorry. So if we want to see expansion to the downside, we want a market maker sell model, which means we have to basically first sweep external liquidity and then reverse and target external sell side liquidity in this case. And therefore I realized I was offside. I went short, but I had my stop like basically too tight. If we basically go short there, we have to keep our stop above the 5-minute reaction block. So as you can see right here, we traded to it and then instantly, so this candle basically opens right here, trades to the reaction block and then closes down here. So therefore our stop has to be basically above the down close candle right here, and that would have been perfect. But yeah, we're still learning. Too tight stop, and yeah, it's just what it is. And then I think I went short here once again, and no, I think I actually reversed, or I don't really know, but I think I reversed. I don't really know. So longs was not the right approach in here. Got stopped right here as well, and then no, I think I got long in here, got stopped, shorted, got stopped. Still, once again, wrong stop loss placement because I did not like, or I think I closed it manually because I did not want to see price trade back above consequent encroachment of the inversion failure gap, but that once again is the wrong approach, because if we are still in high resistance, we have just to keep a wider stop, and therefore, as you can see right here, the candles are respecting the inversion failure gap actually perfectly. So the stop still had like to be above the reaction block on the 1 minute chart or on the 5-minute chart, so right here basically. But then I was like really now sticking to my bearish bias. I was a bit annoyed of myself that I tried like to take longs because it was obvious that we would now trade lower. I was a bit caught up with the fact that we spend really much time in here, but that's only time distortion. Basically the market delivers smart money the opportunity to fill orders, short orders in here, and then we traded lower. I added right here, or I entered and added right here once again, and then we really broke lower. We had actually bullish SMT right here, which I actually don't really like, but I kept my stop really tied to my entry, so I got not stopped right here. And then my first partial was right here near the levels basically of the long wick. So because that's a inefficiency, it was at consequent encroachment, and then we finally could expand to the downside, one partial near the lower quadrant of the daily wick, and then basically right here after we took out this low, then we traded higher. I got basically out of my position, and I could have held it basically to the higher time frame gaps, but this move is really clean. And what I also could have done is also like basically I think ignore the daily wick right here, because as you can see right here, price action is not really reacting off the levels right here. Okay, maybe a bit of consequent encroachment right here, but not significantly. It was actually different yesterday. So yesterday, for example, we can see that the bodies were definitely respecting the upper quadrant right here, so really clean, also the wicks and the bodies, but that was not the case today. So therefore our target could have been even lower. So a partial right here at the lower quadrant is completely fine, you can do it, but we could have also like aimed for the higher time frame gap, and especially even for lower prices, because our regular trading hours is actually, so our target we have to reach at least, I would say, and then we also like expanded lower, and then we just traded higher right here with basically trading into the gap. So right here we basically traded a bit lower than consequent encroachment, then reversed. We had a London close macro, then traded lower, and then traded basically perfect to the low of the gap. So we basically closed the new opening range gap fully, and therefore we can expect support from there, from the level right here, and then we traded to the high, so to the upper level of the gap, and then traded lower, and now we trade basically back to the gap, respected it here, traded back to consequent encroachment. So definitely an important level today, and therefore I'm really proud actually that I was able to analyze the move basically yesterday already, or I was expecting NQ to trade back to the gap already yesterday, and was also like looking for it on Monday, but yeah, we finally got it today on Wednesday, so 2 days later. It's still a valid PD array because we keep it like 3 days after, so like the last 3 days we keep the regular trading hours new opening range gap of the last 3 days, so that's the right way. So it's a bit late, but yeah. What's also like interesting to see, I basically already mentioned the London close macro right here. We traded higher, and what we left is actually a inefficient wick. So that can you see right here, a long 5-minute wick is a really strong target actually, and as you can see right here, we basically traded higher and then broke lower. That's basically also I think a valid entry right here. So that's your first fair gap, and then you just take partials within the wick and basically aim for the higher time frame gaps as well. Then we have our lunch macro, and that's basically our reversal macro because London close macro is still delivered lower, and we also basically closed right here the range, the new opening range gap of regular trading hours. So therefore we can expect we can expect support coming into the market. That's real support, and therefore we could trade higher, and can show you once again that was basically I think right here, basically right here. So that's your lunch macro. It was a bit basically before it, so it was already in play earlier because we already traded to the low. So we fully closed it, and then we basically traded higher, and so we had like the fair gap right here and traded higher. And that was like basically on NQ right here, the fair gap. We had a breakaway gap right here, an expansion block, and then traded into the higher time frame gap, and that's basically perfect. So I think that's basically it. So what I want to basically keep in mind is, or what I learned today is the fact that I have to be like more specific with my higher time frame objective. So to look for longs in here is definitely the wrong approach because to be fair, it's a bit different today because we already swept session liquidity and daily sell-side liquidity, and we had a really strong market maker buy model in here, but it was actually too quick, and also happened before our 10 a.m. macro. So this is basically still manipulation time, and therefore we are just too late in the move right here, already near external liquidity. So that's not a good entry, I have to admit. And right here basically the short is the wrong approach. I just have to keep a wider stop within high resistance, and especially within high resistance it's not actually invalidating the setup if we trade above consequent encroachment or even above the inversion fair value gap right here. So that's actually not invalidating the setup. We still reacted off the reaction block. It's not nice to see that we close above the inversion fill gap. That's definitely not clean. So we are definitely having really difficulties trading lower, so high resistance. But eventually we are trading lower, and that's basically our perfect trade. And I really like this trade because we finally got basically our expansion to the upside we were already expecting 2 days in advance. And what I also like is the fact that basically I had lost a lot, but with just one winning trade we end up in the green. So I made $110 today, but yeah, yesterday was a really big losing day, so still a bit down, but yeah, I think we will get there, and that's definitely the right trade we want to take. I'm really proud of it that we basically managed to be aligned with regular trading hours, and yeah, I just have to get better with like being still more patient, just waiting more for my setup, having a wider stop, only like, well, being more aware of the fact where we want to draw, what's the higher time frame draw, only trade with like one clear bias in mind. And yeah, I think that's basically it. Yeah, see you tomorrow, I guess. If not, maybe Friday. If not, next week. I will always basically be there. And yeah, thank you for your attention.